Dale Pinkert here, TradeGATEHub.com, and we are sponsored, powered by TradeView Markets. Hope everyone did okay during the Fed meeting last week and their statement, which was kind of a whipsaw, as well as the NFP that we had on Friday. My last broadcast was to prep you for both of those days. I gave you a couple of ideas. I said I would sell dollar strength at the 112, 112.20 level with stops over 113.70. We got up to as high as 112.80, but still 90, 100 away from the stop. Now we're trading at 110. To me, this was a pretty decisive candle. I believe we will challenge and take out this 109 low, head to at least 108 with a possibility before this cycle is over that we see the 105 level, which is going to be key. That's going to be the battleground for long-term people deciding if we are turning into a bull or a bear market. And what's important about that level, you could see this was what we had here at a COVID high, right? Before COVID, and headed back down. And then once we took it out, you could see on this monthly candle, we came back to test it. So this is really going to be the line in the sand. There's some others above it, but this is really the critical one right here at about 104.20. So it's possible that we pull back all the way to there. It may not be a straight line move, but the dollar trade from 112, 112.20 with us currently now at under 110 at 109.96 look to have been not perfect, and I never expect perfection at the crap table. I'm glad I used a fairly wide stop. If you can't risk at least the average ATR on a trade, how can you be right for a few days if you can't be wrong for one? So reduce leverage and let your trades breathe. The other idea was to sell US dollar yen into the Fed. I thought we might see 150 again, but here we're threatening the 146 level. Closing under 146 is going to be a pretty important event for the yen. You can see it's a descending triangle. We have a little support at the 50-day moving average, but a measured move from 52 to 46 is going to give you 140, which is another real critical area in the yen. So that's a reasonable target for me. So that recommendation, we didn't quite get to the price level, but direction is right. What really was hit on the button, and once in a while it happens, I was talking about the potential when we were trading in here last Monday. Here we were. If we had a rally back up towards 138, it could give us a right shoulder with symmetry to the left, which is exactly what it did Thursday. And after the NFP number, it came in weaker and really accelerated. Measured move from here is going to be close to 130, the 200 moving day average, but there are some support levels. You're never going to go broke taking profits. So if you see 132, you take some off there, see if we get to 130. But the head and shoulders, right shoulder forecast manifested pretty much right on time. I was looking for a washout into the Fed. In gold, what surprised me is we didn't even take out this low. Okay, we took out this low. And then we had the China news, and the dollar also failed on Friday. So gold looks pretty good here. I mean, we're about to head up here. Maybe we're going to head up towards 1740 again. That would be a level, and then 1800. Silver even looking better. We have it sitting right here at what could be a major breakout. Over 2150 is a 200-day. A lot of people are going to come on board on that. And as I have been accurately forecasting, the gold-silver ratio continues to decline, which shows silver being the preferred long over gold. I mean, you look at the two charts and it's almost like they're not related. You look at that, not making new lows, and the gold probing prior lows, but not washing out to 1590 like I thought it would. So I think we're in a period where if the dollar's going to 105, it's going to be pretty much risk on. When I was here Monday and with Mike on Tuesday, I said, let's see what type of opportunities the Fed presents, waiting until after the Fed acted. And we had this nice little pullback in the S&Ps to 3,700. I put out a buy here at 3,700. Actually, I think we traded underneath it. Yes, 36.96. If we could start closing back over 3,800, which I think is possible, then I think we're on our way back up towards long talked about levels up around 4,100. I think you have to protect yourself under 3,700 now. You move up your stops, just like 3,800 was important. Look, it's important again. It was important on this breakout, then it tried to negate it. And here we are, we tried to negate it again, knocking on the door. So when a number comes into play time after time after time, you have what's a pretty important pivot level where you're long above it, you're short underneath it. I believe we're going to take out 3,800 and make our move. That this was just an opportunity that the Fed provided for us for the continuation of, I don't know what you want to call it, a bear market rally. Don't believe it's the beginning of a new bull market. Might be continuation of the old one, but we'll take that a step at a time. And the last thing I want to cover is something else I said. I didn't think yields would make new highs, and they didn't. So right now we have the potential of a failing rally. Of course, you can never rule out one more push up for a third drive. But if that's the case, I think you're going to see a pretty good rally in TLT. I think it's the most hated asset class in the universe, in the cosmos. And this island bottom after the Fed, after a strong headline number on the NFP is still intact. So I favor the long side of bonds and think that yields are peaking. And if I'm right about a peak, and I won't know until we're back under 380, but right now it looks like a failing rally to me. I could see the potential for 3%, possibly as deep as 260, 270, where there's some more moving averages. Here's your 50-week right here coming in at 270. This would be pretty rapid retrace in yields, and I think most asset classes would benefit from opportunity cost and yields beginning to fall back under real yields to negative yields once again, although most people think we are still in negative yields. The miners had a good day. So even though I missed the silver buy and the gold buy last week, other trades were good. And this is a lesson I've learned is that, if you have a long-term view, there are certain things you don't let go of. And I never let go of my junior silver position and gold miner position. I've been showing it to you guys here. It looks a lot like silver. We get a breakout here in Endeavor over this 200-day moving average. And you could be looking at 520. Same thing here in Fortuna. Not quite as strong. And the gold shares really, they brought up the rear. But even BTG, I really thought I was going to be able to buy this cheaper. Who knows? Maybe I'll still be able to at 260. As you can see, the gold shares weren't quite as strong. GDX, we'll see. But, this was really the trick of the month, was how Newmont washed out underneath support here, under the 40 level. And then a day later, after it was smart to get out under 40. You didn't know if this was going to be the bottom. 2 days later, we're trading at 41. So basically a pretty good call for the Fed and the NFP, especially on the head and shoulders top in Canada, the short in the dollar. And I did cover the headlines in the pound. So if I'm right about continuation to the downside in the pound, I really, in the dollar, I do think there's upside in the pound. up towards this 119, 120 level in the days ahead. And then I think we'll be completing something. So up there, I won't be taking shorts, but that's an objective. And you never go broke ringing the register. I want you to check out TradeView Markets, download a demo, open the small account, and compare the spreads and executions compared to your broker. So if you know you're on the right rate source. And Mike will be with us in an hour and 20 minutes. I hope the analysis I provided Monday you took to heart, because there were some pretty good ideas in there. Glad to serve and add value for my audience and my viewers and my followers. So remember, don't just count your pips, count your blessings. I'll be back here tomorrow with Michael for our Tuesday macro report. Good hunting, everyone. Adios.